So imagine a localized drought down in South America.
Okay, I'm picturing it.
Right. So like 10 years ago, if you were an asset manager, you'd probably just short a few regional agricultural stocks, maybe, tweak a commodities position, and then just go to lunch.
Yeah, it was pretty straightforward back then.
Exactly. But today, that same drought, it drops the water levels in a major shipping canal.
Right, which completely fractures a global supply chain.
Yes, and then that bottleneck causes a shortage, which spikes inflation over in Europe.
And the European Central Bank panics.
Exactly. They force a rate hike, right?
Yeah.
So that sudden shift in the cost of capital triggers a localized credit freeze.
Which then accelerates regional migration.
Right, leading to a full-blown border crisis. And all of this happens in a matter of weeks. You can't just hedge that with a single trade anymore.
No, absolutely not. The old playbook is completely dead.
I mean, it really is. Anyway, welcome to the Deep Dive. Today, we're tearing into this fascinating stack of internal corporate strategy documents, business plans, and sales playbooks.
Yeah, these are all from Sophurion, right? The AI-powered strategic intelligence company.
That's the one.
Yeah.
But to actually extract the value from all this material, we're going to put on a very specific set of lenses today. We are stepping into the executive boardroom of a global asset management firm.
Oh, I like this framing.
Yeah. So I'll be taking on the role of the chief investment officer. My whole world is, long-term value creation, generating alpha, and figuring out exactly where to deploy billions of dollars across these crazy complex markets.
And I am approaching this as the chief risk officer. So my mandate is basically downside protection.
Right. Keeping us safe.
Exactly. I'm looking for portfolio resilience, finding ways to spot systemic threats before they metastasize, and, well, making sure our firm survives these massive geopolitical shockwaves.
We're basically representing that fundamental tension that keeps any investment firm alive, really. I want to accelerate, and you want to make sure we actually have brakes.
Hey, breaks are important. But, every boardroom needs a tiebreaker.
Yes, which is exactly where you come in. You listening right now. Pull up a chair.
Yep, you are the third executive sitting right across this mahogany table from us.
And we're relying on your perspective to help us navigate this just incredibly chaotic global landscape. Because, frankly, looking at the macro environment in these Sophurion documents, your CIO and CRO are both losing sleep.
We really are. And we're losing sleep because the basic physics of the global operating environment they've fundamentally changed.
Yeah, the traditional ways we assess risk and allocate capital, they're just completely breaking down.
So true. The Sophurion sources actually define this current era as the age of convergence.
The age of convergence, that's a great term.
Yeah, and the central thesis there is that isolated risks, they just no longer exist.
Right, like we used to put environmental risks in a green bucket, geopolitical in a red bucket, and regulatory in a blue bucket, right?
Exactly, and you just hand them off to completely different departments.
But today, environmental, geopolitical, economic, technological, regulatory, they're all continuously colliding.
Yeah, they're interacting constantly. Like that South American drought scenario you started with, that's just the perfect illustration of convergence.
Right, a climate event instantly mutates into a supply chain event.
Which becomes an inflation event and then a geopolitical event.
Right, and as the CIO, my biggest problem is that the financial sector's whole toolkit was built for that old world, the world of isolated buckets.
We rely so heavily on historical financial data, it's actually wild.
It is. We get these, brilliant, meticulously audited quarterly reports that tell us exactly what happened 3 months ago.
Right, 3 months ago.
But trying to allocate capital today based purely on that old data, it's like trying to drive a Formula One car on a winding mountain road while only staring at the rearview mirror.
Oh, wow. That is a terrifying mental image.
Right. It gives you a high-resolution picture of exactly where you just were, but zero indication of the cliff you're literally about to drive off.
Yeah. The rearview mirror is completely obsolete when the actual terrain is shifting under your tires. So, to build actual portfolio resilience, we clearly need earlier signals. We can't compartmentalize a looming cyber threat in Asia away from a new shipping regulation in Europe anymore.
Right, because they're part of the same interconnected web now.
Exactly. And when those domains converge, the shockwave hits the balance sheet way faster than our traditional models can even process.
So if the rearview mirror is useless, the logical next step is to just look out the windshield, right? Gather more data about what's happening right now.
But there's a problem with that too.
A huge problem. Because when we look at the windshield today, we are driving straight into a blinding blizzard of raw information.
Yeah, there's this really terrifying statistic in these strategy documents. It says 90% of all the data in the entire world was created in just the last 2 years.
90%?
Yeah.
That's insane.
Right. And yet, executive decision makers, people sitting in boardrooms just like this one, they report feeling significantly less certain about the future than they did 10 years ago.
It's totally paradoxical. The sources actually call this the global intelligence gap.
Yeah, the global intelligence gap. It's basically the systemic failure of organizations to connect all those signals into actionable strategic intelligence.
Right, because think about how a typical global firm operates today. You've got an ESG platform spitting out carbon metrics, right?
Yep. And then you have a governance, risk, and compliance platform monitoring legal changes over in another window.
Exactly.
Hmm.
And separate business intelligence dashboards for supply chain logistics, and then a totally isolated cybersecurity threat monitor.
So if you're looking at your own firm's dashboards right now, you really have to ask yourself, are those systems actually talking to each other?
Because speaking as a CIO, having 50 different dashboards is not an asset. It's a massive liability.
Totally.
If my ESG platform doesn't communicate with my supply chain monitor, I have a massive strategic blind spot. Because information, it just tells us what happened. Intelligence tells us what to do.
That's a huge distinction. Because when you lack intelligence, you just default to a reactive culture. And honestly, this is the nightmare scenario for a CRO.
Just constantly putting out fires.
Exactly. Organizations drowning in disconnected data, they can't anticipate anything. They only react. They wait until the port strike or the regulatory fine actually hits the balance sheet.
Right, and then they just scramble to manage the fallout.
Yeah, they just bleed capital paying for the crash rather than actually steering around it.
So true. And the Sophurion documents argue that we're basically stuck in this information economy right now, and we desperately need to transition to an intelligence economy.
Right, because when you're staring at that blizzard of data trying to find a signal, your mandate changes. You have to shift from just anticipation to actual action.
And that gap, that specific shift, is exactly what Sophurion is targeting with this new framework. They call it Executive Predictive Risk Intelligence.
Yeah.
Or EPRI.
EPRI, yeah. And they make it clear they aren't just pitching another software patch to just, lay over our existing 50 dashboards.
Thank goodness for that.
Right. They're trying to define an entirely new market category to pull organizations out of that reactive crouch.
So how does it actually work? Because they map out the mechanics of EPRI through this very strict 6-stage strategic progression.
Yeah, let's walk through that. It's really crucial to understand how an organization moves through these stages. So stage 1 is just data.
Right. The raw blizzard hitting the windshield.
Exactly. Satellite imagery of a port, millions of social media posts, raw temperature readings. Then stage 2 is information.
Okay, so categorizing it.
Right. This is where we label that satellite imagery as, say, port congestion in Shanghai.
But information alone still leaves us in that reactive crouch, right?
Yeah.
It doesn't tell us what to do.
Exactly, which forces the jump to stage 3, intelligence.
The translation layer.
Right. This is where we connect the dots across those isolated silos. Intelligence is realizing that the port congestion in Shanghai directly impacts the primary supplier for a very specific semiconductor factory in Germany.
Wow. Okay. That's a crucial link. And then stage 4 is foresight.
Yes. Here we calculate what that intelligence actually means for the near future. Foresight is projecting that the semiconductor delay will halt European automotive production in exactly 3 weeks.
Okay, which finally brings us to the operational end of things. Stage 5 is action.
Right. We take that foresight and we reroute our supply chain orders to an alternate facility in Mexico today, before the European lines even shut down.
And stage 6 is resilience. By consistently taking that informed action, the organization absorbs the shock, maintains its market position, and doesn't bleed capital.
Exactly. Data to information to intelligence to foresight to action to resilience.
Okay, I have to stop you there because I need to put my most skeptical, hardened CIO hat firmly on my head for a second.
Or for it, let's hear it.
Walking through those 6 stages, it sounds conceptually beautiful, but mapping out global supply chain disruptions and geopolitical shifts 3 weeks in advance, that sounds dangerously close to claiming you have a crystal ball.
I get that, yeah.
Like, are these documents suggesting this EPRI framework can predict the stock market or guarantee my portfolio returns? Because honestly, any vendor walking into this boardroom promising a guaranteed return is getting thrown right out the door.
And that level of skepticism is exactly what a CIO should be bringing to the table here. But the Sophurion documents are actually explicitly careful on this exact point.
Okay, good. What do they say?
They state clearly that EPRI does not predict the future with absolute certainty. It makes no claims about predicting market movements.
Okay.
And it absolutely does not guarantee investment returns. It is not an automated oracle whispering tomorrow's stock prices in your ear.
Okay, well then what is the tangible value? Like, why are we even dedicating boardroom time to this if it doesn't do that?
Because the value is preparedness, not prophecy. The objective is to drastically improve risk visibility and decision quality so that human leaders can evaluate multiple probabilistic scenarios.
Okay, so it's about seeing the possibilities clearly.
Exactly. By identifying the converging risks early, you can prioritize your resources and make calculated choices well before a vulnerability metastasizes into a real financial loss.
So you aren't playing psychic, you're just making sure you're the most prepared executive in your sector.
Exactly. It gives us the tools to see the shape of the terrain ahead, even if we don't know the exact weather system that's moving in.
I like that. So that transitions us perfectly from the theory of EPRI to the actual mechanics of deploying it.
Right. How do we actually use this?
Yeah, how does an asset manager or a pension fund or a corporate board actually build this capability? And the execution of this philosophy in the documents is their flagship platform, Horizon.
Yes, Horizon. They position it as an executive intelligence layer.
And before my IT department has a collective panic attack, I want to clarify something right away. Horizon is not a rip-and-replace operation.
Oh, definitely not. Nobody wants that.
Right. We're not tearing out our existing enterprise resource planning systems or our legacy cybersecurity stuff. It just sits right on top of them.
Yeah, it ingests the data from all those separate silos to basically act as a translation layer between the raw metrics and this boardroom.
So as a CRO, when you look at the Horizon architecture, what features actually jump out at you?
The ones that really demand attention are the emerging risk index and the risk heat map. Now, I know every vendor out there promises a heat map.
Oh yeah, everyone has a heat map.
Right, but Horizon differentiates itself through how it uses AI pattern recognition. It doesn't just display historical incident reports.
So what is it doing differently?
It continuously scans massive multi-domain data sets, things like climate patterns, global regulatory filings, even dark web cyber chatter, and it searches for anomalous correlations.
Okay, so it's looking for the weird connections.
Exactly. It might detect a subtle statistical relationship between a sudden shift in European data privacy laws and an uptick in cyber probing at an Asian data center.
Oh, wow.
Yeah, and it flags that convergence as an early warning signal way before a human analyst could ever synthesize those two completely disparate domains.
See, but as a CIO, I look at a risk heat map and my eyes just completely glaze over.
Really? Why?
Because a map showing me red zones of like general geopolitical anxiety is useless to me. I can't hedge against general anxiety. I need hard numbers.
Okay, fair point.
And that's why the mechanism I am completely locked onto in these documents is the financial exposure estimate.
Okay. Yeah, that is a game changer.
It really is. Horizon takes that abstract risk and translates it into a quantifiable business metric.
Walk us through how that translation actually happens.
Sure. So it takes the raw data of that port congestion we talked about in Shanghai, right?
Sure.
That's the information.
Yep.
Then it cross-references that disruption with the exact supply chain dependencies that are listed on our firm's balance sheet.
Okay.
It calculates the historical revenue impact of previous 2-week delays for those specific holdings. It applies current inflation metrics, localized labor costs, and then it generates a localized exposure score.
So it's giving you a dollar amount.
Exactly. Suddenly, the dashboard doesn't just flash a red light over Asia. It says, based on these interconnected factors, you have an estimated $595 million annual exposure in this specific sector.
Wow. That completely changes the entire conversation in the boardroom.
Right. It forces a shift from just theoretical debate to immediate capital defense.
But, it also opens up the offense, doesn't it?
Oh, absolutely. Horizon includes these opportunity signals. Because if we can see a $595 million exposure, we can short the vulnerable assets.
Right, you can play the downside.
Exactly. Or if the AI recognizes a pattern suggesting a massive, unpriced shift in a specific energy market due to converging climate and regulatory factors.
That is a pure opportunity to generate alpha.
Exactly. We can adjust our capital allocation months before the traditional market even catches on.
And the defining characteristic of all these outputs, whether they're defensive or offensive, is that they generate actionable, explainable intelligence.
Right, it's not just a black box.
No, Horizon is designed to answer the ultimate executive question: what do we do about it? It gives strategic recommendations that human leaders can actually unpack, understand the logic behind, and then execute on.
Okay, so we've established how to solve our immediate need for clarity. We have the EPRI framework to process the blizzard, and we have the Horizon intelligence layer sitting on top, generating our financial exposure metrics.
Right, our immediate problem is solved.
But our job as executives is to look 5 to 10 years down the line. Where's this technology pushing the global operating environment by, say, 2032 or 2035?
Well, the Sophurion roadmap details a very specific endgame. They refer to it as Phase 4, the transition to a digital-to-digital intelligence ecosystem, or D2D.
Digital to digital. Now, see, that implies the human executives are being factored out of the equation entirely.
Not factored out, no, but elevated above the friction of the raw data entirely. Because think about it. Right now, we're relying on human read dashboards. The AI crunches the multi-domain data, calculates the $595 million exposure, puts it on a screen for us, and then the three of us sit around this mahogany table debating whether or not to act.
Which introduces a massive latency period.
A latency period where the risk continues to cascade and mutate.
Exactly. So in the DTD future, what changes?
In that future, the systems just bypass the dashboard entirely. Connected systems, AI agents, our internal financial trading platforms, and our global supply chain networks, they will all continuously exchange this predictive intelligence autonomously.
Oh, wow. So like algorithmic high-frequency trading.
Exactly like that. But instead of executing micro trades on stock prices, the system is autonomously trading risk posture adjustments based on macro environmental shifts happening millisecond by millisecond.
So instead of our risk team spending 3 weeks generating a monthly vulnerability report, our firm's AI agent is just continuously communicating with Sophurion's intelligence network.
Right.
It detects a climate anomaly in South America, instantly recognizes the supply chain convergence, and automatically dials down our exposure to vulnerable European manufacturing assets.
Yes. And it does all of that before the European Central Bank even schedules a meeting. Sophurion basically wants to be the foundational intelligence infrastructure embedded directly into the plumbing of global markets.
They want to be the invisible nervous system of global commerce. That's incredible.
It really is.
And for a global asset management firm, adopting this level of anticipatory intelligence, it fundamentally changes our whole identity.
How so?
Well, this isn't just about playing defense anymore or, placating regulators. It's a massive competitive advantage. When you can see the converging terrain that clearly and adjust that quickly, resilience capital ceases to be a cost center.
Right, your capacity to absorb shocks and adapt.
Exactly. It's not just a line item on the compliance budget anymore. It is a primary driver of long-term value creation. If we can see the interconnected risks cascading across the globe, and our competitors are still looking in the F1 rearview mirror of historical data, we win the market. Hands down.
We win the market. It represents the ultimate evolution of executive decision-making. We finally stop reacting to the crash that just happened, and we start steering based on the foresight of what will happen next.
So let's pull back and review the terrain we've covered in the boardroom today.
Yeah, good idea. We started by defining the terrifying reality of the age of convergence. We established that risks just no longer live in isolated buckets.
Right. A localized climate event can trigger a geopolitical crisis in a matter of weeks, rendering traditional compartmentalized risk management totally obsolete.
And then we dissected the global intelligence gap. We acknowledged that the massive explosion of data has actually paralyzed decision makers.
We're all just driving into a blizzard, relying on siloed systems that fail to communicate, trapping us in that reactive crouch. Exactly. Then we broke down the mechanics of the new playbook, Executive Predictive Risk Intelligence. We traced that rigorous progression from raw data through the translation layer of intelligence all the way to action and resilience.
And we examined how Sophurion Horizon operationalizes this by generating hard, quantifiable metrics, like calculating a $595 million exposure by cross-referencing supply chain dependencies with real-time global disruptions.
And finally, we looked over the horizon to the digital-to-digital future, exploring an ecosystem where autonomous systems trade risk intelligence at the speed of light, acting as the invisible nervous system of the global economy.
So to you, the crucial third executive sitting at our table, whether you're deploying capital for a sovereign wealth fund, steering a corporate board through a supply chain crisis, or, just trying to navigate your own career in an increasingly volatile industry, the mandate is clear.
Absolutely. The ability to transform a blinding blizzard of information into actionable foresight is the ultimate modern superpower. It is literally the only way to survive the mountain road.
And this leaves us with a final, really vital question to consider long after we leave this boardroom today.
Oh, that's that.
Well, we're rapidly accelerating toward a digital-to-digital reality, right? If AI systems are autonomously calculating multi-domain convergence, identifying the $595 million exposures, and trading risk intelligence with other machines at the speed of light, what happens to human intuition?
That is a fascinating point.
Right. In a world where the staggering complexity of the data is entirely handled by the machines, perhaps the most valuable asset a human executive will possess isn't analytical capability at all.
What will it be then?
When the machine provides undeniable, calculated foresight of a looming crisis, the ultimate executive skill will simply be courage.
Courage.
Yes, the courage to look at the intelligence, break from the consensus, and actually make the hard, unpopular choices required to act on it.